Bank of America brings back zero-down mortgages. It is perhaps everyone's dream to own a place they can call home, where they can lay their head and make great memories. With Bank of America's new zero-down payment mortgage program, anyone can purchase a home with no money down, and the bank will also pay for your closing expenses and private mortgage insurance, or PMI. You heard that right. Bank of America claims they are doing this to serve the community by assisting low-income minorities in gaining financial stability, home ownership, and experiencing the American dream. Affordable and accessible housing for the masses can be revolutionary for many demographics. Bank of America has taken on this task, but the question remains, is their plan the silver bullet to wealth, or makes this sound too good to be true? As a consumer, if you're looking to buy a home, does this look like the best deal for you? Hello, and welcome to another video of Finance Sense, where we cover all the latest trends in the financial markets and the economy. In this video, we will discuss what Bank of America plans to do, or at least claims to plan, and convey some insights regarding its consequences. There are a lot of questions, issues, and concerns associated with these new mortgages, and together we'll unravel them. But before that, make sure to leave a like, subscribe, and comment down below if you enjoyed watching this video, and turn on the notification bell to keep posted. Now, without further ado, let's head on to the video. According to Bank of America, their new zero-down payment mortgage program is meant to assist minorities who have historically been undeserved and are experiencing difficulties purchasing a house. Their argument boils down to this. Since you're already making payments to your landlord, you may as well put that money toward your mortgage instead. Then you'll have a better chance of building equity in your house and saving money in the long run. Bank of America stated that home ownership strengthens our communities and can help individuals and families to build wealth over time. However, there is a cost associated with this mortgage program despite the fact that there is no down payment required, no closing charges, and no private mortgage insurance, or PMI. Someone must pay the bill, so the bank will tack on the extra cost to your monthly mortgage payment. But at least you'll put that money toward home ownership instead of in someone else's pockets. However, we all recall how zero-down mortgages contributed significantly to the real estate crash of 2008 when people bought homes they could not afford because banks allowed them to borrow money as they wanted. Then, as property values dropped, borrowers found themselves unable to recoup their losses and either abandoned their properties or had them foreclosed upon. On the bright side, banks have never participated in any predatory loan schemes, right? Especially those targeting minorities or persons with limited financial literacy. But here's the harsh reality. Banks exist to make a profit. Where do their profits come from? Lending money to others. If they have more cash in hand to give out, they may collect interest on a larger principal amount, increasing their profit margins. They would prefer lending you $500,000 rather than $250,000 since the former generates more interest for the bank. When it comes to its people, the bank doesn't care what color their skin is. The only color they're interested in is green. Therefore, the question on everyone's mind in the bank is, how much money can we make? They are just interested in making money, not promoting social change. Increasing the bank's income and profit by lending you more money is a priority. Thus, the bank will likely agree to your request. The inconvenient truth is that many of us get a false sense of empowerment upon learning that we have been approved for a new credit line. While it's tempting to think, all right, the bank is going to loan me money to buy a flat-screen TV, or yes, they'll lend me money for my dream to travel around the world, doing so incorrectly will not result in any benefit, but will instead wrap you in the hands of the bank. To tell you the truth, Among the finest things a bank will do for you is to turn down your application for a consumer loan if you don't meet the requirements. Why? Let me explain. Getting a consumer loan means taking out a loan for personal rather than business reasons, such as purchasing a luxury item or a vacation. Depending on your perspective, this may be a TV, a designer bag, a cruise, or a credit card. Rejection from the loan application process is preferable to acceptance, since it prevents you from sinking further into debt to purchase something that isn't profitable. Okay, but how about a house? Can we not consider it a valuable asset? It all depends on how you define it. The fact is that some people will take advantage of the zero down payment option, and those people will reap significant benefits from doing so. Some will figure out how to be responsible with their resources, and they will gain much from this program if they utilize it properly. The money they produce will be huge and aid them much in their pursuit of financial security. But majority of individuals are not. Often, these individuals will get taken advantage of by the program since they don't know enough about money to calculate the amount they should only borrow, how their property's value affects their overall financial position, or how to negotiate with the bank to their benefit. Meanwhile, the bank will declare that it is facilitating consumers' ability to become homeowners. Too often, individuals loan far more than they need, purchase a property above their means, and then find themselves trapped there. Then if real estate values drop, they are the ones who will be saddled with a massive debt payment as they are the ones whose homes are worth less than their mortgages. Ultimately, most individuals will suffer because of this scheme, but others will gain considerably. You may gain much from credit cards and other financial instruments if you take the time to learn how they work. The system will take advantage of you if you don't take the initiative to learn it. You need financial literacy and an understanding of the system to succeed. Where do I find out about this system? Banking institutions exist to generate profit. They seek just to profit from your situation. There are 3 ways you can participate in this: handing them a large sum of money to spend on stuff you cannot afford, utilizing the bank's money to generate more money for yourself, or opt out of the system altogether. The next step is to get the financial education you need to make the best decisions for your future. The fact that you've shown that you can obtain financing for a property in the range of $300,000 or $500,000 is not always indicative of your readiness to make such a large purchase. There is a strong case against renting in favor of buying a house since it is possible to utilize the money you would be spending on rent each month to put toward your mortgage. This, however, overlooks the reality that you will now be responsible for all the expenses involved with owning a house, including the cost of any renovations or repairs, as well as the costs of real estate taxes, insurance, and anything else that may arise. And then there's the matter of the amount you're sending in regular installments to the bank. If you take up a 30-year mortgage, for example, the first 14 or 15 years of your payment will be spent paying the interest to the bank rather than reducing the principal balance of your mortgage. So don't expect your payment to increase your home's equity immediately. By the 15th year, roughly half of your monthly payments will go toward paying down the principal and increasing your equity. In such a case, what does it imply? Okay, so instead of paying your rent, you'll put $2,000 monthly on your mortgage. However, during the first 14 years of a mortgage, most of your $2,000 monthly payment will be used for paying the bank rather than your landlord. Here is when your financial literacy and knowledge of where your money is best spent will come in handy. Is it better to purchase a large home or apartment and spend most of your income on monthly rent, or to acquire a smaller home and invest the difference in your abilities, income, and rental property? Now, you're not planning on living in the house or condo you just purchased. Instead, you intend to rent it out to others and earn a profit. Meanwhile, the motivation behind most house purchases is not financial gain, but the desire to create family memories. You're buying a house with an eye toward future profit, but ultimately, the primary aim is to support your family. You intend to use the rental property as a means of generating income. Comparing a house to a rental property will require another set of parameters. For this reason, you should not consider your house an asset, but rather a liability. However, it is always to your advantage to realize a profit from your property. However, the issue is that your house becomes nothing more than a drain on your finances. You'll be drained financially until you finally decide to sell, at which point you'll hopefully make a profit. Instead of relying on luck, you should take a more practical approach to your finances, as no billionaire or truly accomplished person ever boasts about being wealthy by, say, paying off their mortgage or amassing their home's equity. That'd be a huge plus, though. When discussing how wealthy individuals amass their fortune, the subject of their house is almost an afterthought compared to their business, stock market, portfolio, property, and various investments. So, you should avoid the trap of attempting to play the same game as everyone else by adopting the mindset of the wealthy. You will receive the same results if you do what everyone else does. To sum it up, banking institutions are in the business of generating money. So it's time that you begin thinking outside the box and getting some financial knowledge. Whether this is good or bad for you depends on your perspective. The primary goal of Bank of America is profit. They would not be running this program if it did not provide a profit. The truth hurts like this. Now is the time to put your financial knowledge to use, avoid being duped into handing up your hard-earned cash, and instead, determine whether or not the scheme is in your best interest. You need to be financially literate and think critically for yourself because while the program may be beneficial for some, it will likely be ineffective for most individuals. Hi, we hope you liked watching this video and learned something important. If you enjoyed it, please like, subscribe, and hit the notification bell to stay up to date on our videos, and make sure to leave your thoughts about Bank of America's mortgage program in the comments section below. This is Finance Sense, helping you to keep up with all the latest trends in the financial markets and the economy. Until next time!